Good morning, everyone. I'm Vince Lanci, and today's Gold Fix Market Rundown. We will be discussing gold tops $3,000 an ounce. That's spot for the first time. And we're going to tell you where it's going to go from here. We're going to try to anyway. Anyway, let's start with the markets. The 10-year yields are 432, up 5. The dollar's 103.57, down 25. The S&P 500 is 55.79. Up 46. The VIX is 22.80, 23.85, down 80. Gold is 22. I apologize. 29.98, up 10. Silver is 34.04, up 17. Copper's 4.87, up a little less than a penny. WTI is up 37 cents at 67.25. Natural gas is 4.11, up 2 cents. Bitcoin is 83,300, up 2,300. Palladium's 971, up 11. Platinum's 995, up 1. Gold, silver is 88. Soybeans 998 unchanged. Bid corn 448, down 4, and wheat 563, down 2. I'm going to move a little bit faster than normal. All right, here we go. There's what we're going to talk about. There's the stories yesterday. 3,000 is just a shot away. Almost a predictive statement. We did everything but say it was going to 3,000. MUFG discusses gold and energy after the Russia-Ukraine war. It was mostly energy focused, but I think the gold insights were very good, and we put a verbal note out to that effect. Rabo's Michael Every. Trump is liquidating the old America to remake the new, which implies services are out, manufacturing is in, globalism is out, deglobalization, onshoring supply chains, mercantilism is in. Founders AM special audio comment, you know what that is. Gold hits new all-time high, silver soars after Besant interview. That's an exclusive piece we did for Scottsdale. And there's the homepage. Let's get to it. This morning, ING, I think they were the first bank to put out a quick comment on gold. Gold tops 3,000 an ounce for the first time. Gold just topped $3,000 an ounce for the first time ever. Tariff concerns that risk higher inflation and slower economic growth are spurring demand for safe haven assets like gold. We don't know how many safe haven assets there are left like gold. There is gold and there is silver. Gold is one of the best performing major commodities this year, up more than 14% year to date. It has hit a series of consecutive record highs along the way, driven by trade friction, central bank buying, and inflows into ETF holdings. Spot on statement there. Total known gold exchange traded fund holdings have grown by around 3.5 million ounces so far this year to 86.4 million ounces. And that will be key to something we discuss in premium today. Central banks bought 1.045 tons last year, accounting for about a fifth of overall demand, and more purchases are likely to continue this year. That's right. If we see more additions, this will give bullion prices a further tailwind. We believe more gains for gold are in sight. All right. We have that full report, and we pretty much gave you most of the meat off of that. But we have a lot more for premium. It won't be very long, but it's about this. It's about the next price targets for gold. And we have them. And they're legitimate, and they're based on demand. Okay, markets, stock market recap. Stocks ended sharply lower in the U.S., and Canada's main stock index fell to a 4.5-month low. So U.S., Canada. We're doing the Americas now, okay? It's America. Market news. Oh, I didn't mean to do that. In market news, Treasury Secretary Scott Bessent said Thursday the administration is more focused on long-term health of the economy and markets and not short-term gyrations. While Bessent said the administration is attentive to market moves, he predicted that both real economy and markets would prosper. We've also added business news. All these headlines, we have these stories in premium. U.S. producer price inflation, labor market stable ahead of tariff turbulence, and U.S. producer prices. Exclusive, not our exclusive, Reuters exclusive. Citigroup plans to slash IT contractors, hire staff to improve controls. Dollar General forecast a muted 2025. Tesla's working with Baidu. Trump family held deal talks. I'm going to try it here. We're doing the Canadian news now, okay? Couche-Tard could lift $47 billion offer for 7-Eleven if Japanese firm cooperates. Canada initiates WTO dispute complaint on U.S. steel and aluminum duties. These stories are more and more continue at the bottom. We're working on the new format here. Data on deck. Today's consumer sentiment, that's out. But I think there's some things going on, not on the monetary side, probably some speakers. President Trump has some executive orders that he wants to sign today that may be relevant. All right. Oh, well, you're not supposed to see that. So let's go to the charts, and then I'll go to premium. Okay, so here's a gold monthly chart. If you're just to throw some things at you there, these are not my ideas, but they make sense. The cup and handle breakout for gold, the 13, it's like 13-year cup and handle. This is the handle part right here. It implies, well, we've already hit that target. Okay, we've hit that target, and we're above it. So if you want to look for a target above that, you would go to a log normal chart. And a log normal chart, I believe, puts us at 4,000. That's something from Jordan at the Daily Gold. Anyway, so there's a monthly chart for gold. And let's talk about silver. I did some drawings on silver this morning. There we go. Let's talk about measured moves. Okay, measured moves are basically this depth equals that height. That's all it is, right? Okay, but you could look at them all you want, and you most of the time you come up empty, right? But there are certain criteria for me that look at measured moves in terms of timing. So V-shaped bottoms, historically rare in silver. You get a V-shaped bottom, and you break this top. As long as we don't go back in here, $35 is not a problem, which coincides with this. And I've had this on my radar I've had this high on my radar for a month or so. And now that this has happened and we've broken that, I'd be a buyer of pullbacks, technically speaking, to this area, not holding long if we go under here. If you want to do it on a daily or intraday, it's up to you. But this is the move. We're through here, and it should go up. And you say, well, that's just kind of random, Vince. Why would you say that? I'm like, yeah. Look at some more. In a market, I'm having microphone problems again, aren't I? If I had a sponsor, I'd buy a new computer. All right, check this out. Measured move, up. Measured move, up. Measured move, fail. All right, so what are we looking at here? We're looking at markets where depth equals distance or depth equals height, because you have a liquidation, usually a forced or stressful liquidation, which gets absorbed by a buyer. It has to be a buyer, not just anyone buying. It has to be a buyer with an agenda who wants to catch falling knives, which creates the V-shaped bottom. You get above this, you could use that one. I don't like to use those. Get above that, depth equals distance. You get above that, depth equals, well, we hit it, we fail, we're done. Okay, that's it. You're out. You're out below here, right? You're long above here, you're long here, and you're out below there, right? So it does another one. Depth, distance. Depth, distance. And note, when it's right, it rarely, sputters around. It gets above it, and you get a nice long candle. It gets above it. It didn't really get a nice long candle, so it kind of sputtered, and it came back, right? Gets above it. It pulled back here, but still ran. Didn't stop you out. Didn't pull back at all. Boom. And here we are again, right here. Same damn thing. Somebody is accumulating silver. Now, let's do a little fractal work here. We'll zoom out a little bit. Where's my blue one? Don't I have a blue one here? There it is. There it is. There it is. And that's where we are now. So if my daily one hits 35 in silver, that would put this one in play. You follow? So above 35, you're looking at 33, call it to 29. So that's $4. So 35. Well, let's call it 34 to 29 is $5. So that puts us at $39. I wouldn't say it's just a kiss away, but I would say that if pullbacks hold above, say 33, right? Uh, then I would be comfortable saying that, $39 is not really that hard to do. And I've said that before. And the final boss would be if my alert goes off on $35, which brings us to a nice little summary before we go into premium. Today, in summary, on Friday, at the end of the week, gold tops $3,000. Will it stay there? We don't know. It's probably a little bit overbought right now, but it doesn't really matter. The market has hit a level that's going to raise awareness in the psychology of Americans and the world. We're in play now. The key is, where will the puck go next? And that's where we want to skate. Anyway, I've had better summaries before, but there you have it. All right, so where are we? We go down here. All right, so in premium, we have for you all the news described above, and we have the ING report, which is really just kind of an alert. All right, I'm going to touch on this and give you an idea of how to come up with a target. Market goes to $3,000. You say, that's great. Where to from here? And you start seeing 3,500 is next. 4,000 is next. 5,000 is next, because it's euphoria, right? And we're all a little euphoric. Don't get me wrong. But since Trump got elected, what have the bullion banks, the good ones, been saying about gold? Before Trump got elected, they were saying the central banks have done their work, and now we need to see if the US investors are going to buy. And the sales pitch legitimately was, we don't think the central banks are going to keep buying as much as they have been. Therefore, we need US ETF buyers. And this came in around buy season, actually. So October, November, right before the election. And we were looking at this saying, yeah, they're right, but it seems kind of cynical, kind of jaded. And during that time frame, the market was rallying and macro discretionary was taking profits before the election, and the ETF people were buying it. And of course, after the election, they got destroyed for a month, right? So the market, a month at 2,800, not at 2,000 or 1,000. So at that point, hesitation on my part for being just euphorically bullish was, okay, the macro discretionary sold to the waiting ETF buyers, and now Powell's not going to cut rates anymore because Trump won. So that can't be good for gold, and yet it was good for gold. And I think what we're seeing here is we're seeing a grassroots movement that's about to expand in a significant way for gold. So how do you quantify that? Well, you assume, heaven forbid, you assume the banks are right. So the banks are right, and they say ETF money is back for good, and central bank money is back, but a little bit less than it used to be. Well, here's the assumption. If there is no significant decline in central bank buying, and there hasn't been, okay, they've been saying it'll happen, but it hasn't declined. If there's no significant central bank decline in buying, look at the black line. The green circle is where ETF buying peaked, the second peak. The first peak was during COVID. The second peak was in January 2022, right when the Russian-Ukraine war started. The red circle is where we are now in terms of ETF buying. So what happens to gold if central bank buying stays the same and ETF demand gets up to January of 2022. Well, I'll tell you what happens. You can add at least $600 to the current price of gold. So that puts it at 3,600. Now, you can also, in a percentage way or a log normal way, you can add $1,285 on top of current prices. So I would say if central bank, this is like my headline, if central bank buying does not significantly decline, and there are no major, surprises in the world, then the flows of ETF money coming in will drive this market to 3,600 and 42.85. Those are my levels, 42.85. Why? Because from here to here, I'm talking about measured moves, right? From here to here and from here to here, those are measured moves of interest. And what did gold do? It rallied $600. It rallied $600 here. And on the second peak, it rallied $600. So it went from like 1,200 to 1,800. I'm sorry, from 1,200 to 2,000 or 1,800. I'm sorry, 1,300 to 2,000. And then it went from back to 2,000 on the re-rally. So here we are at 3,000. You can add $600 to that and take it at 3,600 if ETF buys get to here, or you can add $1,285 to it. So that's it. And that's where the puck should be if things remain the same. I'm Vince. Have a great day.